Rodrigo Nino is pioneering a new form of commercial real estate investing for the little guys. Now, Nino's firm Prodigy Network allows small investors to pitch their dollars into commercial real estate projects. Now, just imagine your chunk of change helping build the next New York City skyscraper. It could be a possibility, and it's by using crowdfunding. This investment platform allows smaller investors to gain access to commercial real estate assets that previously only big players could purchase. I sat down with Nino earlier to find out about his model, and I asked him how this crowdfunding platform began. Take a look at what he had to say.
In Colombia, where I'm originally from, I like to be considered a New Yorker because I've been here in the States for 16 years. People started to crowdfund on a retail basis capital for specific projects over 20 years ago. And what happened then was that obviously there was a lot of fraud. And the government intervened and created this fiduciary system where third-party companies regulate the conversation between the crowd and the sponsors. So there's 24 of these companies that, with oversight from the local SEC, that create backstops and protections to effectively mitigate risk and eliminate fraud entirely. So I was very surprised to see this mechanism, you know, in my home country. And I did this project on behalf of a third-party developer from Spain, which now is the world record in crowdfunding. And we raised over $175 million in less than 36 months for the first skyscraper in Colombia, through this fiduciary mechanism. And quickly, obviously, I wanted to export, quote-unquote, that model here to the United States. But the problem was that open solicitation to accredited investors and unaccredited investors for private offerings wasn't legal up until September 23, 2013. So I created a structure with my attorneys here in New York to solicit my pool of investors from overseas that originally bought condominiums in Florida under an exemption called Regulation S. And that was the genesis of crowdfunding in commercial real estate in the United States. And we did our first project on the Regulation S with the participation of a third-party professional fund administrator, replacing the fiduciary model in Colombia because it didn't exist here. And we did this AKA Wall Street project, $120 million, out of which $30 million were crowdfunded by investors from over 6 different countries. Then what happened was that when we were planning on launching our second project, 17 John, here in New York as well, under Regulation S, we learned that the restriction of the open solicitation was lifted through the Jobs Act, so that effectively, under Title II of the Jobs Act, effectively accredited investors could be openly solicited to participate in these projects, you know, that we wanted to bring to the general population. So we created a structure to not only solicit investors internationally, but also domestically through Regulation D. And we are shooting to launch our third project very soon, and we already have obviously a pipeline of other deals, you know, in the works.
Rodrigo, it's impressive stuff, and I mean, kind of amazing that you innovated and created this different way of raising capital for these projects. But on your website, it says that the crowdfunding model for real estate investing is made possible from the contributions of 4 different types of participants. Can you explain what these 4 types of participants are and how they operate together?
Sure. You effectively need, on one hand, you need the crowd. Then you need a sponsor, which is somebody like us, or a developer with the business opportunity. Then you need the platform to crowdsource, you know, or crowdfund the money. And then you need a fiduciary company that effectively makes sure that everything is transparent and properly handled on behalf of the investors, as I was saying, with the ultimate goal of eliminating fraud entirely and minimizing risk.
It's fascinating, and I want to ask you, does Prodigy invest in the projects it sponsors? And if so, how much does it usually invest in these types of projects?
We do. Right now we have a vertically integrated model because I want to control the process from A to Z. As part of our business plan to eventually open up the market and our platform, to other third-party sponsors looking for this type of financing. But so far, we invest obviously equity in our deals. At least 10% of the equity is from us. And we syndicate ourselves, we subordinate ourselves more than syndicate, I'm sorry. We subordinate ourselves, in a waterfall structure to the investors that we invite from the crowd. Eventually, we will be opening up, as I was saying, our platform, to third-party developers because we see that the appetite is big and we have a clear line to underwrite and curate, if you wish, the deals that are going to be present in our platform.
Rodrigo, how much of the capital is equity capital and how much is debt capital?
It depends on the project. For example, or let me clarify something. Crowdfunding is about access. It's about access to underlying assets. So the return and the capital stack depends on essentially the underlying asset. For example, in Colombia or in any emerging markets, we do our projects all cash because we believe that taking senior financing right now or even junior financing in pesos, in particular in Bogota, is risky without knowing clearly what will happen with the dollar and the recovery of the U.S. economy. As opposed to here in New York, where you can get access, like I was saying, in this project, aka Wall Street, to a loan of $72 million at LIBOR +2 locked in for 5 years, which is very cheap financing. So in addition to access to the asset itself, you can give access to very cheap financing to investors that didn't have it before. So to answer your question more simply, it depends on the underlying asset and its peculiar characteristics in the market that it is in.
All right, that makes a lot of sense. Now, the risk with most alternative investments is the potential to harm individual investors. So how does Prodigy address transparency controls and various conflicts of interest that might arise?
We effectively understand that crowdfunding is clearly a response to the lack of transparency that drove the markets down in the last crisis. If you think about it, a fund in real estate, a multi-asset fund, is probably the only form of funds that won't let you invest in the individual stock of any of its underlying real estate assets. That doesn't make any sense. It's like being able to invest in a pool of stocks, including Apple, just to give you an example, without having the possibility of investing in the specific asset, of the stock of Apple itself. So we believe that more than anything, what crowdfunding brings to the table is transparency, as individuals will know exactly in what projects their money is put and invested by their own choosing. That's what we believe. This is the creation of a fourth asset class, because the smaller investors now, jointly with stocks, commodities, and bonds, will have the possibility to invest in this fourth asset class that wasn't available to them entirely.
That was founder and CEO of Prodigy Network, Rodrigo Nino.